Hey everybody, so I just wanted to do a overview video and we're going to cover some economic data that's going to happen next week. There's actually quite a bit happening next week, and that's because the start of the month happens to have a lot of jobs data. So just starting us off, we're going to get the ISM non-manufacturing PMI, and they also call this the services PMI. So essentially, what we're looking at for the numbers is above 50 means that we have industry expansion, whereas below 50 is saying that we have contraction. So just a little bit information about the services PMI. What they're doing is that they're taking into account business conditions that are going on in the service sector, such as employment, production, new orders, prices, and inventory to determine if we expanded or contracted for that month. So if I'm just going down here, I'm going to show you guys some of the numbers and just some of the previous numbers so I can give you a better idea of how this works out. So let's just go all the way back here in 2020 in April reporting for March. So in April reporting for March, we're still looking good. We're above 50, but then notice that in May reporting for April, we started going below 50. So as you guys can see, we had 2 months of this going on. And then here in June, that was reported in July, we started going back above 50. So now you guys can see just kind of how this works out. So where are we right now? Well, recently we were at 69. This was in November, that was reported in December. So this was right before we had our massive slide. So as you guys can see, here in January reported for December, this took a really big nosedive. So you guys can clearly see that. This is 7.1 points. And since then, we've just continued to fall. So our most recent report was 55.9. Now we're forecasting 54.5. So this is continuing to fall. So that's definitely not good. It means that the service sector is contracting bit by bit. Now, essentially, under 50 is officially contraction. But what I mean by contracting here is that, this number is going down every report. So, if we do go below 50, that's going to be very bad. So do keep an eye on this. Now going on to the next piece of data, we're going to get the US JOLTS job openings. Now, this is basically a survey that's done by the BLS, and it helps measure job vacancies. So it collects data from employers about their business's employees, job openings, recruitment, hires, and separations. So if we're just looking at this number right here, I'll kind of show you guys some history as well. So let's go all the way back to 2020. This is always a good reference point, just going back to this pandemic level. So here we can see 6.19. And then you could see in April, that was reported in June, this number went down so significantly. Like, look, 6.19 million to 5.046 million. And you can kind of see that we actually rebounded pretty quickly. So we got back into that 6 million range. And then we started making quite a bit of jobs here. So in April 6th, that is actually reporting for February, we got to 7.36, and then this number just continued to go up. We're getting like 10 million here, 11 million, and then now we're still pretty high. So we are forecasting quite a big drop here. So our actual for the last report was 11.4 million. Now we're forecasting 11.05 million. So this is a pretty significant drop, I'd say. So definitely keep an eye on this one as well. And we got the FOMC again, but it's not an actual meeting. This is just the minutes. Now, what happens in the minutes is that they're giving us a detailed record of what they talked about 2 weeks ago. So this is going to be pretty important. And this information drops uh, at 2 p.m. Eastern Standard Time. So definitely watch out for that. You will probably see some sort of knee-jerk reaction from the markets here. Now, going into Friday, we do have some pretty important information. We have the U.S. non-farm payrolls. Now, essentially what this is that it's the total monthly increase or decrease in paid U.S. workers across most businesses. So this information is pretty important, and it comes out pretty early in the morning, and it does tend to shake the markets. And you do see a lot of fluctuations in the dollar when this information does come out. So let's just kind of take a look at this here. I'll just go back in history, just like with these other reports here. So let's look for March. All right. All right. So here you guys can see that this number went negative back here in April, reporting for March. And it continued to go negative, like really, really negative. And then we went positive again. So now let's see, where are we right now? Well, right now we reported 390,000 last, and now we're forecasting 270,000. So this is a pretty steep cut, I would say. And yeah, I would definitely keep an eye on this because we don't want this to go negative. If this does go negative, that is going to sign definitely some worries for the market here. And then lastly, we're going to have the unemployment rate that comes out. And right here, we're not really expecting all that much to happen. So essentially, we're expecting us to still report 3.6%, or at least that's the forecast here. Now, just to show you some history again, we're going to go all the way back to 2020 from March. So here you can see we went to 14.7%, and then it was 13.3, 11.1, 10.2, and you guys can see how this kind of got better over time. So we are going to watch this closely, and if it does start ticking up again, then yeah, that's going to be a little bit worrisome. So now let's go straight to the technicals. So I just want to start with SPY, and I usually do start with SPY, so I guess there's no particular reason. I just think that SPY is one of the best representations because it has 500 different stocks within it, and they're representing all these different sectors. So if we're just looking at SPY, I'm going to go on the 1 year time frame. Now you guys can see we're well below this 50-day, we're below this 20-day. We actually rejected off that 20-day, as you guys can see. And if we're going on a lower time frame here, well, we went down, we filled this gap right here. We still haven't filled this gap right here. And we could have done that right here. So, you know, we honestly could have just went all the way down. We could have had a follow-up day right here, filled that gap, and then rallied, but we didn't. So this kind of makes me want to be a little bit more cautious just because we have these gaps to the downside that are unfilled. But we also have this gap to this upside that hasn't been filled yet. So, you know, we're literally in this sandwich right here. We've got this gap that goes all the way to like 400. And then we got this gap that goes all the way down to like 367. Now let me just confirm that on a lower time frame. Yeah, that gap is right around 367. So that's why we're seeing all this chop. We're just seeing sideways actions because we have this gap to the downside, we have this gap to the upside. Now what has to happen for us to actually see more clear direction is that one of these gaps has to get filled. Now if this gap gets filled to the upside, well then we still have this gap to the downside, and things do get a little bit dangerous, you know. And if we do fill this gap to the downside and we start rallying, well then, you know, I wouldn't be as worried unless we make lower highs. Now if we just tanked all the way down here, we filled this gap, we rallied, we did something that looked like a W, then I would perceive that as pretty darn bullish. And then, maybe we could go back and fill this gap, and then who knows after that. So, maybe we could actually just go down here and then we could fill both gaps. Or maybe we could go up here and then we just fall down. So who knows? But just based off where we are, we are closer to this gap, I believe. Yeah, we are closer to this gap down here than we are to this gap all the way up there. So just looking at it like that, I do want to be a little bit more cautious, and I wouldn't want to be playing calls right around here. Even if we do rally, I don't think it's going to be a crazy rally, just given all that economic news that we're going to see. Also, keep in mind, we do have all these earnings going on, so I wouldn't want to be too bullish around here. Now, let's just take a look at the VIX. Now, this is another reason why I don't want to be too bullish here, because we do have 3 prior points where the VIX has bounced off this trend line, and look where we are now. We are pretty darn close to the VIX reaching this trend line right here. So if we do reach this trend line, it's right around like 26-ish, but I guess, yeah, it'll be in like the low 26 if we do want to hit this trend line, and then we'll see if we bounce. But we don't have to bounce off this. We also do have this 200-day moving average that we could potentially bounce off of. And if we fall below this, then we do have this trend line as well that also has 3 touch points right there, and right there. So if this breaks down, I'll look at the 200. If this breaks down, I will look at this trend line. Now, there is something I do see that's pretty interesting on the Qs, and I'm going to point that out right here. So let me just zoom out for you guys. So if you guys see, we have this downtrend line right here that we've bounced off several times. Now we have this top trend line right here that we rejected several times. So this right here is a falling wedge, as you guys can see. Now, I wouldn't be surprised if we just rally again just to hit the top of this resistance line and fade again, possibly hit the bottom of this line right here. Now, there is something a little bit more interesting that I do want to point out. We're going to go on to the weekly time frame. Now, just take a look at this wedge and take a look at where we are right now. It wouldn't completely surprise me if we just keep bouncing around within this falling wedge, and then, we do hit this 200-day moving average and we break out of this wedge. That would not surprise me. And then maybe we could have a pretty strong rally to the upside if we do hit this 200 weekly. Or what could happen is that, we could, just go down this wedge. We could have a breakdown, and then a lot of people could get liquidated here. And then from that point, we can break out of this wedge and then have a strong rally to the upside. So I'm paying very close attention to this 200 weekly, which is at 261.58 on the Qs. And I'm paying very close attention to this wedge pattern that's building out. Now let's just go on a lower time frame here. Let's go on the 5-day. Now we did fill this gap right here. We did put in this double top, and then we faded. And what we're going to want to do is we're going to want to get above this double top right there and above this double top right here, and then rally. Now that would look a little bit more bullish, and I'm not even sure if we're going to get back above this right here. So if you do look on this 1 month time frame, this does kind of look like a head and shoulders. So we'll kind of see, is this just like a second shoulder right here, and then we fall, and then who knows what happens after that. But I do also want to note that here on the Qs, we did fill this gap right here. So on the SPY, we haven't filled that gap, but on the Qs, we did. So to me, that is kind of interesting to see that the Qs is actually giving us a much more clear trend on what's going on right now. It also, so this is kind of what I'm thinking might happen. Maybe we could rally, and then maybe we could hit this prior gap zone, and notice that this prior gap zone also lines up with the top of that trend line right here. So it wouldn't surprise me if we rally and then we reject right here. So that would probably be right around 289.69-ish. So I wouldn't be surprised if we rally, we reject right there, and then we make another leg lower. So that wouldn't surprise me at all. So that is one kind of hypothesis that I do have right now. Now here with Microsoft. Microsoft is pretty interesting here. So as you guys can see, I do have this downtrend line. We did bounce off that, and now we're just kind of hanging out right here. But we also do have this other trend line right here that is kind of like the last resort trend line. So if I'm looking right here, we also do kind of have that wedge pattern playing out. So we'll see where this one takes us. But right now, I did see a very clear reject off this 50-day moving average. So that's never really a good sign if we have a clear reject off the 50-day. And we did still bounce off this. So, we'll see what happens. This is still a lower high, and we are making lower lows. So overall right now, does not look good. Apple, now this is where you can really see that wedge play out. So here we have this downtrend line, we have this top trend line, and we are building a wedge. So where do I kind of see this wedge potentially taking us? Maybe right down here to around 117.28. So as you guys can see, it's kind of like a shelf of support right here. And we've really just been bouncing back and forth off this, as you guys can see. Now let's just go on the 1-year time frame here. So we're basically right on the 20-day moving average. So we're slightly above it. 138.74 is that 20-day moving average. We're at 138.93. Now let's go on a lower time frame. Now on this lower time frame, we did fill this gap down here, right? As you guys can see, filled it. So, what happens next? Honestly, we've really just been kind of moving sideways. So right now the direction is a little bit hard to say where we're going. So we'll just kind of pay attention to the futures market, see what happens on Sunday and Monday. Keep in mind that Monday's closed. So we'll get a pretty good idea on what's going to happen over these 2 days where we have the futures market open. Now, maybe it could be like Juneteenth, where we had a pretty strong rally, just 2 days on the futures. So we'll definitely look at that when we do get there. Now looking at XLF, XLF, it doesn't look that great, but there is a potential bright side. So if I'm zooming out here, we can see this 2020 prior high that we made before this crash right here. Now we're approaching that. So that's going to be right around 29.69. So if we just continue to fade a little bit more, we could potentially have this strong bounce right off this area. And I do think that anytime we do reach pre-pandemic highs on a lot of these indices, it's going to be a very important area. So we're seeing that with XLF right now. We're very close to that. So don't get too bearish if XLF does get around here. I do think we could get some sort of bounce, and that's obviously going to help SPY out quite a bit, because SPY does have a pretty decent weighting in the bank sectors. So that's basically my overview video for the week, and I hope you guys enjoyed this video.